Hey, good afternoon. My name's Hannah Perky. I'm CEO of Evelo team with Keller Realty, and I have Bob Warner, one of our most senior realtor partners with us. We're going to be talking about the housing market in 2025. I'll let Bob kind of talk through our breakdown, but we'll jump right in here because we like to keep it short so you guys get the data that you need. So, Bob, can you tell us what's been going on in the local housing market in 2025?
Yeah, so when we do this in January, we take just a slightly different approach. We like to look at sort of what the year over year overall numbers versus just the monthly year over year changes. So that first one up is the median sales price. So for our local market, we were up 4.3% year over year. So that's sort of in line with expectations. I think we were expecting somewhere from like 3 to 6% growth maybe. And we are starting to see some parts of the country that are flat, maybe down a little bit, or maybe just in that 1 or 2% range. So we're still seeing some good movement on that front. Next up is that cumulative or median days on market. So that's sort of the midpoint between the low and the high, a little bit more reflective than just the average days on market. So as we've talked each month, we've been seeing that creep up this year for sure. So we ended December at 41 days, and that is up 21.4% for the year. So again, very different from just even, for example, when I started in 2013, that number was over 100, so we're still well below that. But just not so long ago, that number was below 10. So definitely some movement for sure. That month supply of inventory. So again, balanced market has historically been considered something between like 5, 6 months in that range. For the last couple years, we sort of have been in the like 1% range, and we've sort of creeped up above the 2 month range this year. And that's where we ended December as well. Might be seeing moving forward that a balanced market might be more like 3 to 4 months or 4 to 5 months in that range. So as you see that number of days go up and the inventory go up, those two things kind of present themselves together. And then we always try to look at that average list price received. So we ended December there at 97.5%, which is just down 0.2% from last year. I'll get through these last couple pretty quickly. That active inventory, so we ended December at 52.54, and that was up 20% over last year. That closed sales number at 2414, that was up both year over year and year to date. So we're seeing more closed sales. Obviously, with more inventory, gives opportunity to sell and close more homes. Up here is new listings. So we had 1,500 new listings in December. That was down a little bit year over year, but up for the year overall, 5.3%. And sort of that's it for this batch.
Okay. And the next piece that people are always asking about, and we always talk about, is interest rates. So, what has been happening with interest rates?
Yeah, so they've actually been really consistent for the last several months in this like low 6% range. And as of last week, that's kind of where we ended again. So when we did this in December, we were at 6.22% was the average for that 30-year fixed rate mortgage. And last week we ended at 6.16. Again, these things fluctuate on a daily basis, and these are just big, broad averages. But I've seen a couple lenders hit the high fives in terms of their quoted rates this week and last week. So the general consensus is it seems we're going to sort of stay in that very high fives to low sixes for most of the year. And that's where we spent most of 2025 as well.
Okay, good to know. All right. What else? Any other final thoughts about the market that we should be hearing from you today?
Yeah, I don't normally stick with interest rates since we just talked about that, but I am actually going to stick there because at this time last year when we presented this, the that average interest rate number was 7.26. So being in that low six right now, 6.06, 5.99, 5.95, 6.01, we are definitely down a full percentage point from where we were last year. So it's just always good to kind of show these charts in terms of what's that mean in real dollar savings to you. So if you had a home loan for $400,000, if you took it out last year at this time, your payment would have been 2731 just for principal and interest, of course. This January, it would be 2,400 flat. So that's a savings of about $330 a month. And over the life of that 30-year loan, that's $119,000 savings. So while 1% may not seem like a lot, that's a significant drop to have happened from January of 2025. And that either gives you more buying power, meaning you could potentially get into a more expensive or larger home if that's what you were looking for, or the minimum, being a little bit more budget conscious, that gives you some great savings on a monthly basis to kind of factor in that 330 some dollar savings on that $400,000 example from where we were this time last year.
Oh, thanks for sharing that. That's huge and like a really great piece of information, I think, for people to consider because sometimes the changes seem so incremental, but looking just over a 12-month period, what an amount of savings for someone. Love it. Okay, that's it. So we got you guys the information quick. We hope that's helpful as you consider buying and selling decisions. We're here for any central Indiana real estate needs and happy to connect you nationwide and even worldwide if you have real estate needs in other locations. You can reach out to us in the contact info in the comments, and we hope you have a great rest of the day. Bye-bye.